What I'm going to do is I'm going to focus upon real estate because I really think the interesting discussion here is how Bitcoin demonetizes real estate. You know, I tweeted this morning that that Bitcoin is property, and I think a lot of people are getting the idea that Bitcoin is really technology to manifest property rights to 8 billion people. But if we look at Bitcoin as perfected property or engineered property, but probably the most constructive thing to do is to compare Bitcoin to other forms of property and other assets to deliver property rights. In the absence of sound money, if fiat currency or the currency of any given society is not holding its purchasing power, then rational actors, be they corporations or individual investors or families, will tend to take their weak currency or their weakening currency, and they will want to invest it in some stronger asset that'll be a store of value. So when the yield on a savings account is zero, then there's no one thinking they're saving money at 0% interest. So now long-term store of value moved to a focus upon stock indexes and real estate and and ETFs. Right, the classic would be I bought an apartment to Airbnb, or I bought a rental apartment or rental property, or I bought some kind of share in a REIT. And that takes us up to the stage where people started to notice Bitcoin. We had a spike in housing prices where we're monetizing, we're basically putting a premium on housing in excess of its utility value. We had a spike in commercial real estate. We had a spike in meme stocks in their value. We saw extraordinary spikes in collectibles, in watches, in sports cars, in artwork. So as the central bankers were flooding the economy with excess currency, the currency is trying to find a tangible asset that will hold its value as the currency debases. Bitcoin, right, is one of those assets which is now being monetized, and it is rising through this chaos to be the apex property asset, or the apex monetizing asset. So I'm of the opinion that we're going to see a consistent demonetization of other key assets, and maybe the big four: currency, bonds, real estate, and equity. Right? Those are the four big asset classes that have been monetized by excessive money printing. What I'm going to do is I'm going to focus upon real estate because I really think the interesting discussion here is how Bitcoin demonetizes real estate. There's a value of real estate to a utility value to someone that's using it, right? The true utility rental value. And then to the extent that the price of the real estate is beyond that, that is the monetary premium. And there's a whole lot of commercial real estate that has a monetary premium. The way that you would know that it has a monetary premium is you think about all the people that have excess cash and they don't want to store it in cash. They don't have a safe bank account or a savings account to put it in, and their view is, I've got to buy an investment property. Why do you even want to store your money? Why do you even want to be an investor, right? The only reason anybody wants to invest in anything is because they believe that the risk-free rate of return on their money is too low to keep up with inflation. So in extreme hard money environment, the average person, right, the non-expert, isn't an investor. The world is full of people that are actually making investments in order to preserve their wealth, and they're doing it because of the weak money. And so one of the places they make their investments is in real estate. How does Bitcoin demonetize that? Well, I think that you just want to start from first principles, and you want to ask, what is property? And you can either get to pure property by taking away all the defects of real property, but let's start with real estate, real property, and strip every defect away from it. So what's the first defect? Well, the warehouse has got a finite life. So I say to the genie, why don't you make the building last forever? Like literally immortal. You know, pure energy, pure solar energy. Like stars last 1 billion years. Now the second problem is buildings are okay. Remember, the building was worth $2 million, 100 Bitcoin. Well, is the building that's indestructible and immortal worth more or less now? Right, a little bit more, right? Maybe a lot more. But generally, a building that will last forever, that you can't destroy, is more valuable. Now the issue is the building has maintenance fees. There are all sorts of fees normally on an ordinary building, and you're paying insurance, that's a maintenance fee. Well, the insurance goes away if the building is indestructible, right? The maintenance fees go away, and if the maintenance cost of the building goes away, then it's worth even more. What else drives down the value of the building? Property taxes. So in cyberspace, there's no property tax. If I could move the building, into orbit around Jupiter, there'd be no property tax, right? Move the building. So now I've got an indestructible, immortal, maintenance-free building with no property tax. It's getting a bit more valuable. Now, what impairs the value of the building? Well, a limitation on who you can rent it to. The ability to freely subdivide and recombine the property at any frequency makes the property more valuable. The other thing you want, right, with any property is you want to upgrade it over time. So my property would be a lot more valuable if I had the right to develop it. Now, who controls that right? Well, it's your neighborhood, your precinct, your city, your state controls your right. But if I had property in cyberspace, I would have no limitations on my ability to develop it. Real estate in the physical world is upgraded with tractors and machines and steel and electricity, right? And material. But what if I could upgrade the property using computer chips? Right? If I look at the efficiency of a computer chip, they've improved by a factor of 1,000,000 over the past 10 to 20 years. But if I look at the efficiency of construction cranes in New York City, they have not improved by a factor of 1,000,000 in the past 20 years. So clearly moving into the computational domain for development out of the physical domain is a way to upgrade the value of the property. And that's another really nice thing about digital property versus physical property. One definition of privacy is my property is invisible to those who would do me harm and available to my friends and family. Okay, the ultimate private property, though, is property that's so private that no one that can do you harm, whether they're a criminal or they're a competitor. If you did have a 100-story indestructible shining building in the middle of a city, don't you think that people in the city would start staring at the building and resenting the person that owns that? I don't want to own a perfect piece of property in the middle of a city where there are malefactors that would do me harm. I want the property to be in the middle of the Milky Way nebula somewhere a billion years from now, where no one can see it, no one can get to it, and no one will resent the fact that I have it. That is what privacy is. What would you rather have? The skyscraper in the middle of the capital of a hostile nation state, or the equivalent skyscraper somewhere in the ether that's just as useful to you? We haven't gotten rid of all the deficiencies in property. For example, if you want to buy a piece of real estate or sell a piece of real estate, if it's residential, it costs you 6% coming and going. Make it possible to transfer it at zero. You know, you can transfer Bitcoin, on chain or on the Lightning chain at numbers that are either anywhere from 10 basis points to 1 basis point. That takes me to my next point. I want my property not just to be private. I want it to be unconfiscatable. Okay, if you own a farm outside of a city and the city wants an airport, they can seize your farm by eminent domain. And maybe they'll take it for their road, and maybe they'll take it for their airport, maybe they'll take it for their public park, or maybe they'll just take it because they don't like you. Well, so if you actually put title to the property in your head as opposed to anywhere else, then it does become unconfiscatable. I want the property not to be able to be impaired by developmental restrictions, right? And anything physical, by definition, can be impaired. But anything in the cyberspace, you have a decent opportunity to keep it from being impaired simply by moving it. But if someone offers me a better mortgage, if they offer me a mortgage at half the cost, but that is coming from a different nation state, I can't take that mortgage because I can't move the building. So when the property becomes flexible, it becomes possible to mortgage it to anywhere, to anyone on earth or in the heavens, right? Any bank could become the counterparty in the mortgage. What if I wanted to mortgage it at any frequency? What if I just wanted to borrow some money for the next 30 seconds? So the ability to mortgage to anyone at any frequency is an upgrade, right? It's a very flexible piece of property, and I can move it at any frequency. And I'm, in essence, driving down the cost of my capital in the same way that when I rent it at any frequency, I'm driving up the yield on my asset. And that makes it a better business. Can I just store an entire billion-dollar building, in the palm of my hand? What if I could store a 10,000 floor building and I could wear it around my finger? In this particular case, if I can get to infinite economic density, that would be very convenient. Because if I don't have infinite economic density, when it takes you an entire city block to have, a warehouse, well, then you run out of the ability to manage that warehouse. And so this infinite density gives me a lot of flexibility to manage the property however I want. So if you actually could get the universe to agree that there'll never be more than 21 million blocks of perfect property, that's the icing on the cake, right? When I did everything else, I created digital property. But when I capped it at 21 million blocks, I made it digital scarcity, or the ultimate scarce property. When you put a restriction on the property development, it drives up the value of all the property within the city dramatically. So here we're talking about putting a hard cap limit on digital property in the universe for all time. It doesn't take a rocket scientist to figure out that now I've got $2 million to invest. Do I want to own a $2 million warehouse in any city in the world, or do I want to own 100 Bitcoin? Commercial real estate was a good idea for property preservation in the 20th century. But in the 21st century, it's an antiquated idea. And Bitcoin is the opposite of that. Whereas commercial real estate peaked, as for when it peaked at different points in different jurisdictions over the last 100 years. Bitcoin is now just beginning to come into its prime. And every time a new Lightning wallet is shipped, Bitcoin is upgraded. And every time a new layer 3 app is created, Bitcoin is upgraded. And every time a new miner comes online, Bitcoin is upgraded. And every time a new regulatory guideline is laid out, Bitcoin is upgraded. So Bitcoin is just continuing to improve its property. Real estate is continuing to decay its property. How does this get demonetized? Well, you can see that the only reason that a casual investor wouldn't start to shift their allocation of savings from commercial real estate to Bitcoin is they don't understand Bitcoin. If you walked up to the typical real estate investor and say, quick, give me the 18 crippling defects in your real estate, they couldn't name the 18 things I just laid out to you. And you know what? I couldn't either before I knew Bitcoin. You don't understand the defects in your property until you see perfect synthetic property or digital property. Just like you don't understand the defects in your currency until you see perfect currency. If you don't understand Bitcoin, you don't know what's wrong with gold. Right? And you don't understand what's wrong with fiat currency, really, until you understand what's right about Bitcoin. Property holders, they don't understand what's wrong with their investment until they understand what perfection looks like. The 10 defects in real estate versus Bitcoin, and then you go, wow, the only thing not to like about Bitcoin is it's new and volatile. What is the negative? Oftentimes people have managed to not mark their real estate to market. If you can avoid a mark-to-market loan on real estate, then you're in good shape. Any big property development family that went bankrupt, they normally went bankrupt because their real estate assets got marked down and their loans got called by the bank. So it's that volatility which is the number one risk. And as Bitcoin's volatility decreases over time, the loan-to-value ratio that you could incur if you're acquiring Bitcoin will start to advance. Right now it's a low loan-to-value, but it will grow as the volatility deteriorates. And whether or not the asset is volatile doesn't change all the other strategies with regard to real estate investment. If your only strategy is I wanted to borrow money to buy real estate, well, then you're going to lean toward non-volatile traditional assets that your bank won't remark every day. So I think that education will cause people to gradually demonetize their real estate and move it into Bitcoin. Like I don't want to pick which of the 500 S&P 500 companies is undervalued. I just want to park my money somewhere. So I think Bitcoin there is emerging as the monetary index or a monetary index that you can acquire. And so it will tend to demonetize those indexes. And as those indexes get demonetized, if $1 billion gets pulled out of the S&P index and put into Bitcoin, then that's $1 billion of demand for stocks of the underlying 500 companies in the S&P that goes away. So as the money gets pulled out of the indexes and the ETFs, then that will demonetize the equities of the underlying constituents. And as that happens, if one of the constituents is undervalued on a standalone basis, then a professional investor will come in and they will buy that stock in order to arbitrage the difference. Well, I mean, it strikes me that if you look at gold, at least half of the value of gold is the monetary premium. And if people just limited their gold to their gold demand to what they want to wear, then you would see a gold price which is half to 1/3 of what it is right now, and the remaining monetary premium would flow into digital gold, which is Bitcoin in this case. Right, so I think that there's probably 10x the amount of monetary premium in real estate that there is in gold. And if you look at the monetary premium sitting between, real estate and equity, one would think that, you're starting to approach $100 trillion number there. The great waste of capital, or the great capital sinks in the world, are all of the money trapped in bonds, trapped in equity indexes, and trapped in overvalued real estate. To a lesser extent, the currencies, but I really think the bonds, the real estate, and the equity, and probably the bonds and the real estate. The bonds are the biggest, the real estate's the second biggest, the equity is the third biggest, but all of them are an order of magnitude more than the capital that's been trapped in the gold asset. So $100 to $200 trillion, right, is kind of trapped there depending on how you look at it. And, you can work backwards to try to figure out what that means to Bitcoin. The discussion we just had on digital property was, what are the 18 frictions that I want to remove from physical property to create digital property, and how much better would digital property be than physical property if it was immortal and could move at the speed of light and indestructible?